Hello guys, glad to have you on board again. Today will be the last one before leaving for some vacations into Canada. So we'll try to make this one quick, as anyway there's not that much to talk about. The Bitcoin has been doing quite some interesting things. The second day we've been closing higher than the previous day and closing at the highs. So it's kind of great. It looks like the bulls are regaining some strength out there and pulling out their bullish momentum. So we'll see how long this can last. We are heading toward the first resistance level, so we'll see if that's end of that scenario or if things could still go a little bit higher. We're just going to go on the lower time frame and make some technical analysis to try to figure out what potentials we might have out there. So in finding some kind of structures. So first of all, if this is a corrective structure, I don't think that this is nearly about to be over, simply because we don't have enough peaks and valleys out there. So if you want to sell, I think selling right now is not an option. You might want to search for an additional pullback and then probably one more push up to get to selling. So if you're in the selling perspective, this is what you might want to find in order to trade. So wait for an additional peak in order to get there, simply because, remember, think simple whenever we are ranging. If you want to be bearish, this must be a range after a bearish impulse. It can very well be the case. The thing is that you need to have even number in terms of peak retracing that trend, which means 1, 2, 3 is not enough. You need to have 4, and in order to make 4, you need to have an additional pullback back to supports. So we need to test some supports right now, retrace back down, probably testing those levels or even these ones, but we need to somehow break an intermediate support. So we need to make an intermediate support, breaking it down, making an additional peak. And if you absolutely want to sell, there I'm ready to say, okay, you can eventually forecast that selling entry, but you need to wait for an additional peak out there. And if what you forecast is just a retracement, you should be putting yourself in that perspective as well, which says you might be targeting one of those Fibonacci levels. So why not the 61%? It's obviously probable. We can just fail in here, retrace, and make it just another peak back to 50% retracement. That will be it. Basically testing that resistance, failing it the first time, breaking a support, and getting in there again to try shortly breaking that resistance, making our fourth peak, and getting to eventually having something to trade out there. So I really suggest for you to wait right now if you want to sell. Not the good timing. Moreover, you just got a taking profit pattern, suggesting that for those who've been buying, securing the trades are necessary at that point. Not necessarily taking some profits, but just, I would say, rising the stop losses. So those who've been buying the lows, you need to be at break even right now, or making some partial profit taking to pay for your stop losses. But you shouldn't be in a loss situation. If the market is retracing down, you must just not take a loss. That's all it says. Taking profit confirms that the bulls are starting to get in control. The thing is that if we do have a bull trend, we'll have to get further than that. We'll have to install the trend. At some point right here, it's just speculation has been playing, and we'll see how far this can go away from the current prices. But right here, it's just a risk management sector for bulls, meaning taking partial profits if you feel like it, or just rising the stop loss at break even. I think one of those two options has to be performed near the current prices, simply because this is what sine waves suggest, even though we might have a little further pushing in terms of momentum, as we don't have no confirmation at that point. So basically that's it for the cryptocurrencies. All the other cryptos are basically following the same path out there, meaning Ethereum is still working around its ending pattern on the daily chart, still unconfirmed by the momentum. But as I said, we're still somehow above oversold level. We've made an oversold pattern out there, and the market remained above this, which means really it is either we'll have to trigger some kind of exit pattern on momentum by breaking down temporarily and very shortly, or option number 2, we remain above those oversold level, even though the confirmation pattern took way too long to trigger. Generally, it has to be 6 bars top to consider a double sine wave and momentum signal, which is not the case in here. We've got more than 6 bars in between, which leads me to believe that it is still too risky to consider that a won battle. We could pretty much have a bearish reactivation without pre-signal that wouldn't necessarily surprise me. So I'm kind of still trading in the same mood, which is wait and see. I have not enough clues to have decent risk management out there and making more reliable decisions with them. So instead of having that confidence, I'm just basically waiting to have elements orientating the scenarios, either bullish or bearish, kind of a 50-50 scenario right now in terms of odds. And yet I prefer being bullish simply for simple reasons that being 50-50, I'm having a look at risk-reward potential, which means what do you risk for what potential gain? And if you look at the upside, it's much more rewarding in terms of a potential bullish trade. This is the only reason why I say, for those who've been making the buy and hold scenarios, to me, we're nothing close to anything you should be worried about. All we have in front of us right now is just confirmation that the market is hesitating on a long-term level, which means we could go slightly lower, but this is nothing you should care about. If you made the buy and hold, all the signals suggest you were right to do so, and that right now you just have to wait to break some resistances. So in terms of Ethereum's buying, pretty damn well regarding sine wave, but in order to make sure that we're right, we need to get back to resistances and break them up. Latest resistance is out there, which means Ethereum is still at risk, but short-term risks until it hasn't retraced up to the previous resistances and broke them up. Same thing goes for Bitcoin. If Bitcoin manages its way up to the 8,500 and manage to break it up, we might be able to to forecast the eventual termination of the crashing pattern, but doesn't necessarily mean that you'll have to go that you have green light to go leveraged. Nothing close to this, because we could just very well have a fucking up market going in there, failing to get to that resistance, and basically just breaking this one, retracing back, testing the triangle for a bit, failing, and then we'll have to take away all the stop losses at once after all. So, as I said, to me, really, we need to break that resistance and install prices, multiple closes above those prices to make sure that those prices are now tradable. We shouldn't just get there for a couple days, trying to get there and rejecting those prices pretty fast and returning back to pull back in the triangle. I mean, if we pull back in the triangle and having a bullish reactivation, that's great, no problem. But if for some reasons we were to just range above the level and breaking it down, obviously all the stop losses were triggered there. And this will basically trigger the psychology I'm looking forward for, which is I want to see either the market just doing nothing, which is the desert crossing phase. The speculators will be so desperate, having nothing to trade, that they just basically stop speculating. This is option A, and option B is just the one we've been forecasting before. It's just we have to get those speculators to leverage trading again. To a point, they're going to switch to red trading area, putting too much risk into those leverage scenario, and the market makers will just basically see this, switching them to when they're switching to red lights, and whenever the red lights will flash, basically they will just sell you out there just to take the stop losses. As I said, they have two options to take you down. Either they're going to take what you will release because you will stop trading on the desert crossing phase, or option number two, they're going to get you into leverage trading and take down the stop losses to get you to sell your Bitcoins. If they want to buy, they need you to sell. We've been clear about that. I hope you understand that that price mechanic. If they want to buy with huge amounts, they need sellers. And in order to get sellers, either you desperate them from buying or you take down their stop losses with margin calls. So still pretty much the same scenario to me right now. Market is hesitating between two options, and from what I can see right now, obviously it doesn't seem to be the desert crossing phase, as we're not volatile at that point, but we're moving and we shouldn't move that far. So it's either we're going to have a correction in the next following days, erasing all the previous gains, or we're just going to try making that scenario, and I wouldn't be one of those following there. I'm not going to make the damn FOMO trading or whatever in here. I'm just going to basically wait to have potentially a trap out there, and eventually I'll even consider making a tiny short selling out there. Very, very low leverage, because at that stage of advancement into crashing patterns, I don't really want to be a seller. And there's clearly a resistance in here, and if we install prices above, I don't want to sell. It's just if we make some kind of piercing line, making something like that, I mean just breaking, making the candle close in the day right after we invalidate with a bearish engulfing, at that point I'd be damn ready to reverse the market and go bearish again, just to try taking profit, making some profits out of that potential bearish phase that could follow. But basically, if you want to trade it low risk, you don't want to be aggressively selling out there, really way too aggressive, just waiting for the pullback and the market breaking down in here. It's probably those prices that you want to sell to trigger the bearish movement and just follow through and taking all the stop losses at once. So that's it for the cryptocurrency sector. Now we're moving to general asset classes, and we'll start right away with the AUDNZD, who's causing me a lot of problems right now. Even though this shouldn't be the big of a concern, I have to reduce my leverage out there for a very simple reason. I've been leverage 7 on this one, and all my gains are now falling apart. So it's not losses at that point, clearly not, but I've been losing a fucking crazy amount of money out there by just losing gains. I chose not to take profits out there, and right now it's obvious I should have, because all the gains that I've made on that movement, I just lost them all entirely, and it's almost 10,000 euros I've been losing out there, and I'm pretty fucking ashamed, because I should have taken those gains. I don't really know why the market is pullbacking that low. It's not normal to me, but you might have guessed, nothing is normal to me recently. The latest few weeks have just been crazy. It's like the more you try to think the market, the more it's going to go the opposite side and trade. The most stupid trades are working just well. It's like, think stupid, do the opposite of what you will do if you were thinking, and you're going to go right. This is basically the market moods right now. It's just, you're thinking, you're probably right, but I'm going to prove you wrong first, and then I'm going to give you right. So it kind of feels like a really odd market situation out there that I don't want to fight with leverage position. I mean, the last time I've been making that same decisions was right here. I said, okay, the market is breaking down, I'm too leveraged, I have to reduce the damn fucking leverage. 2 days later, we were right above the resistances. I pretty damn expect the market will do just the same. But I still do have to make that same decision today. I'm too leveraged to let that market with leverage 7. So I just took some half profit. I'm back to leverage 4 and waiting to have further information. I really think that we're going to find some buyers out there, but as I don't know, and I hope you got my point in here, it's just I have really a strong feeling, but I'm not going to break the rules out there simply because I have a strong conviction. If you do this, you're just simply going to cross the fences. You consider the strategy as a protection. And if you move out from those fences, and if you just say, okay, I'm right, and my strategy might be wrong, so I rather like being confident in me and not my strategy. If you do that choice, might be right, and you might be profitable and more profitable in some cases, but you might be a lot more losing whenever bad timing will come and you'll take wrong decisions among those. So the question is, I'm getting out for a simple reason. Even though I have that fucking strong conviction and I'm once again exiting right at the lows, I don't want to take that risk. Because if for some reasons the market was just about to collapse for political reasons or whatever shit this is, if the market goes there, I'm going negative. I have average return price right here, which means I'm pretty safe right now. I'm in pretty nice gains. But if we go there, it's going to be losses. And if you want to manage losses with a damn fucking leverage 7, you know it's not going to do well. So I don't want to manage losses with the leverage 7 because that's too much money at play. So I'd rather like take some gains right now, reducing my exposition to that market, waiting to have reactivation signals. And if we reactivate without breaking that low, I'll get in the damn market again without questioning. But the thing is that right now, as there is a doubt, whenever you are leveraged, you put out the damn fucking money. Even if that means losing that pricing in here, and if it means rebuying what you've been selling at those prices instead of those, has to be done to me. It's a question I don't want to ask myself, so I just done accordingly. I hate that. I really hate myself when I have to press that button, but this is how it goes. I'm doing it anyway because that's what the strategy tells me to do. I cannot hold this thing with leverage 7, so I'm getting back to leverage 4. But let's be really, really straightforward in there. I remain heavily buying on the heavily a buyer on that market. Leverage 4 is nothing close to not buying. I'm clearly buying. I have a strong bullish conviction, but leverage 7 is too much of a strong bullish conviction. That's a mistake, and you don't want to be making those mistakes. Anyway, that was today's lesson in terms of psychological management and things like that. Even if I hate what I just had to do, even if I think tomorrow or in 2 days from now, we'll pretty much be bottoming the market and retracing back to resistances. And if you're having a look at the weekly chart, I clearly think that this week is going to be a lower shadow candle. But I don't really know for sure, and not knowing cannot be possible with leverage. You can just be leveraged when you got a trend. And right now, the trend might be at risk, because if we're breaking that bottom, means that we're breaking resistances and breaking support, and that's the sign of a range, not the sign of a trend. And if we're ranging, means I have to change my scenario. So I'm waiting right now, adjusting the risks, and of course I'll narrow the leverage as well. If we have to break down that support, I have to take away some additional leverage out there and getting probably to leverage 2 or 3, but leverage 4 will be too much again. So I'm doing it right now, waiting to have further informations to get into trading, because I don't know if that market truly is bullish right now. We must not break this down. If we do it, means that we're still in ranging and that we could go tracing down to those levels. I will remain a buyer, but just I will buy those prices instead of holding the ones I currently do have. I've been putting leverage because I thought we were mature enough to get to trending. Apparently that's not the case. Other assets are performing pretty well regarding gold and silver today. We've got the US oil might be at play. So it's still pretty damn hard to figure out what's at play, because if you're having a look at the daily chart time frame, what we've done yesterday is pretty confusing. We've been breaking the highs, breaking the low with upper shadow candle, lower shadow candle, and basically closing into previous day's range. So it's barely the most unreadable market you could have. You don't know. All you have is two boundaries: a support, a resistance, and you don't know what the market is going to play this. You've got the market catalyst, so it's totally unable to speculate out there. It's either you have the number before it's published, and you may make some insider trading out there, but I have no clues. To me, I don't see insider trading activity in here. I don't have the number. I don't know how the market will react to that number, so I'm not trading. For now, I'm just basically waiting to have the prices making a candle closer. So right now, it's either we close above that level and we'll have to wait for the next resistances to forecast a potential bearish entry. Option number 2, we make the candle close below that low and we'll have to get into the trading situation, but with a trend following trade, which means lower leverage than expected. But I cannot take the speculative entry out there because I have not enough information to do so. So kind of a wait-and-see approach among the US oil catalysts. It's going to be later today, so we'll see how the market will react to this. But for now, it's impossible to get to trade this. So it's basically waiting to have new informations. I hope the market will not just put a candle like that and be there tonight. Because if we're there tonight, means once again the market will have fucked me up and fucked the timing to get me out of trading out there. But it's too risky to get in, and once again, missing a trade is not a problem. You're missing trades every second, so don't be ashamed if you're not into this one, even though it's been forecasted, it's been anticipated. It's not possible to trade it speculatively right now, and I just hope the market will leave me some room to get into that trend before making a stupid candle like that, which we could very well have tonight if for some reasons the number will disappoint in Wall Street. Now we got to talk about euro dollar. It's been retracing and making the damn fucking bearish engulfing pattern. So we found the damn resistance on the euro area. So have a new resistance. We'll have to pull back in there, but as I was forecasting, we're rejecting the red area. Euro is pulling back, and therefore EURJPY is making the same fucking bearish engulfing. So we damn have it right on the chart right now. The fucking euro yen found the resistance right on the level I was forecasting to be. It's just that I've been putting maximum leverage out there, so I couldn't trade that level. But that's how you do. When you speculate, you expect something to happen, and sometimes the market won't do it that way. It kept on pushing higher and higher to get up right up there, but right now I think the bears took it over. It's just a matter of time right now. Ranging a bit might be necessary or not. All I know is that right now I'm back into bearish into EURJPY, because euro is going to be consolidating. Yen is probably going to pull back, is probably going to move up, which means bullish yen, bearish, or ranging euro means euro yen is going to be bearish. Same thing goes for USD GPY, but I think euro dollar is going to be a range. We're probably going to have to sell in here to buy in there, and it's going to be a buy to sell, buy to sell, buy to sell, kind of a ping pong playing out there. I'm just going to be waiting for this to happen, and until further notice, it's just a euro dollar is going to be a range. So you can play either euro dollar or USD yen, or euro yen or USD yen. Don't really give a shit. You take whatever you want. It's just you have to pick one of those two simply because of the yen. This is the yen that caught my interest in those two currency pairs, not necessarily euro or dollar. So you can pick one. You can pick the one you want. I think in the long run right now, euro is going to be stronger than the dollar, which means in the long run perspective, USD GPY might be more interesting, but in a short term perspective, those two can be played as a couple. So AUDNZD, we've been talking about this one. USD MXN still waiting, and USD CNH is them trying to retrace one fucking damn thing again. So we got the taking profit, which means those who've been selling right here must be secured. That's the case to me. So I'm right here with a stop paid right here. So my stop loss is now there and paid by the market. Okay, so I've been taking partial profits on USD CNH just to pay for that stop loss. I'm ready to put additional selling entries on those prices, but right now I'm just basically fucking waiting to get further information. As you can see, we're failing to make the overlap, which means wave 1, 2, 3. Wave 3 is shorter than wave 1. So we've got two options in here. Either we terminate the wave 4 right in here and we get to another bearish impulse, which is highly probable but still not forecasted to be. So option number one, we terminate in here, we make a wave 5 that is shorter than wave 3, and we're going to probably terminate on that support. Final option, we make a wave 4 into wave 1 territory, probably there, as we'll have to remember when we're making ending diagonals, the wave 4 is always reaching out to supports traded in the wave 1. So that support in here can be acting as a resistance right now and could be a target for wave 4. So this could be a resistance and a target for the USD CNH. So this is a price I might be ready to eventually get into trading for a wave 5 situation only upon signal only. So if I do have a bearish signal in there, that could be interesting to trade. To get to trade that wave 5 is going to be slightly lower than wave 3. Generally, we're reaching out to wave 1, 2, 3 waves. Okay, so probably wave 5 is going to terminate itself right there. Okay, so consider it to go there, and probably over to wave 5 in here, and wave 5 will have to be shorter than wave 3, so probably going to terminate in here right on that support, and we'll have to buy afterwards. So it's not buying to get into making new highs. 5 bearish impulse, it means we're bearish, and this will be a leading diagonal, just means we'll have to make A, B, C or any other consolidating structure before getting into more bearishness. So waiting to have further information on USD CNH. It's clearly something that I have a closer look at during the next few days. Watching closely for this one when I'll be on vacations. But this is one of the markets I'll be putting alerts on and eventually trade even being on vacations. AUDNZD is one of those as well. Regarding the stock market, I'm basically doing nothing. The market is kind of having leaders and thinking about a huge thing as Amazon is set to break the trillion barrier as well, and we have some rumors, not rumors, but just the market would like to see Apple buying out Tesla, even though it's very less probable. The market wants to think it that way, which means we have Wall Street's mood, which is basically money, 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 and fucking dollars in their eyes at any time. So Wall Street wants the damn fucking money. It's a sign of heavy greed. And whenever Wall Street's greedy, you don't want to be part of trading. You just want to be either short-term following their stupidity or just doing nothing and waiting for a tipping point to reverse. So I'm choosing option number 2 as I'm on vacations. I'll just be watching closely potential bearish signals we could have, but I'm not trading this for now as we've been terminating the bearish seasonality, the summer bearish seasonality, and we're heading into September, which is generally a bullish month. But we are then head into October, which is another bearish seasonality that will be double down with us heading into midterms elections. So we'll have lots of mess ongoing by then. I think September could be a bullish month, not that bullish of a month, but we could probably make a 3 to 4% upward move along the month, slightly grinding our way up, and probably we're going to head into more troubles heading into October. Getting probably slightly higher early October, but probably retesting supports as we move into October with heavy risks of breaking them down. And if we do break some major supports, you know how it goes. It's basically a falling knife that could be a play because we have lots of bubbles ready to burst, and if we do burst those bubbles, Wall Street will have nothing to hang up for. So that's basically it. So US equities right now just trading sideways. We've got something to talk about regarding the FTSE, as FTSE has been trying to gap up and tried and already made the pullback. So we tried to make an extracting gap, an acceleration gap, and the market is refusing to do it. Doesn't necessarily is that bear of a signal, but that's not bull. Means we've got taking profit, and the bears apparently still are at play on the FTSE. So I've been remaining bearish on this one, and I think we have some interesting timing. I would like to see the bears fucking up the bulls, which means we have a bullish trend line in here. Basically, this is the triangle we've been trying to break up. But as you can see, the breakup didn't went very well. Could be an ABC structure, and if that's the case, we're gonna have to fuck up right here and gonna take all the stop losses of those who've been trading bullish. And this is where I'll get to make the trend confirmation, which means if we go there, means we have no buyers, and if we have no buyers, means we can install a trend. So that will basically be the moment where I'll get to switch into validation and putting leverage on the FTSE. So for now, it's still waiting. We could go just there and finding some support. So, but that's the area in which you want to get to validation. Sorry, I just lost myself in here. So anyway, we got it done with the FTSE. Is pretty much what I said earlier. I'm still trying to figure out what's at play with the indexes in general. We're trying to figure out the support in here with the GPN index. So I think I'll have to get out at some point. I think right now might be a little bit too early to consider that done, but I think we're going to break up that resistance. The question is, to me, the big resistance will be right in between those two, which means the previous high and this. Okay, we could just, if we do fail right in between, which means if we build some kind of triangle in here and making just a tiny bullish impulse, failing in that specific area and reversing, then I don't want to be getting out. So I'm still slightly bearish in here with a very low confidence, because to me all the asset classes regarding equities are just heading higher. The market doesn't want to fear, has nothing to fear about, but there is still the risk of an unexpected market catalyst that could show up and fuck up all the bullish scenarios. But unless we have this, I think very low odds to see some bearish equities in the next following days. But as I said, as currently the market is just doing the opposite of what's rational. it will be normal to have some more bullishness right now. So what if the market was just taking it the wrong side and going bearish right now? So I really have no clues, because to me the market is nothing close to technical, it's nothing close to rational, which means it's just fucking noise, and I'll just wait to have rational traders back in that market to put some normal pricings I could take advantage of. Just as I said previously, I think right now the market is just crazy because we're just having crazy people trading it. So the more we have that, the more irrational the market will be, and maintain itself in that perspective. So I'm just patiently waiting for volume to put back, and rational traders to limit the market and prevent those stupid trends to keep on going forever, which is the case right now, and you don't want to be fighting this as long as this mood is at play. Regarding yields, yields are heading higher, and finally, and that's normal, but I think that time we're going to have to extend the prices, which means instead of a slowing pace, we could have an extending pace, an accelerating pace, with the market moving higher and higher and faster each and every time. So I expect the yields to just fucking rise, and I hope they will rise as fast as they can, so they can get me to produce a nice gain before the market's expiration. That's because I've been trading futures contract out there, which means on 5th of September my contracts will be out of date, will be outdated and will be closed. So I pretty much hope that we'll get to target number 1 before heading into that expiration. Job is done, as I said, job is done on the EURJPY. I've been breaking the previous day's low, so right now don't expect the market to just collapse. We're just basically going to range this a couple of days, but we can validate this as a viable resistance, and I think the market, sorry about that noise, has just shown some signs, god damn it, of weaknesses, and we'll see how it plays out in the next following days. So that's it. So as I said, I'll be leaving into vacations tomorrow, heading into Canada. God damn it. So to those who want to meet, I'll be pretty happy to do it. And for the others, we'll just meet in a week from now. I'll probably, if I do have the time, and if I have interesting things to talk about, I mean, if the market is doing some big changes, and if I have the time to do it, I eventually make some updates, video updates right from there, but I want to give promises I wouldn't be able to handle. So I'm not promising anything, but if I do have time and opportunities to talk to you, I will obviously do it. In between, be safe, don't put too much leverage in such stupid contexts, wait for the smart money to get in, and limit the market moves to stop those ongoing trends that will go forever. This is not how a normal market works out. This is how ranging works out. So we've been ranging all summer. Beware that because ranges can very well be invalidated and reversed brutally. So don't expect the smart money to obviously just buy because all the signs and Wall Street's showing signs of it. It could very well not be the case, and if that's not the case, then you might be a little bit surprised if Wall Street's deciding to brutally reverse at the opening, at the reopening, when volume will show up early September. But as I said, the volume can just remain silent throughout September. Just let the price move up and the volume will just play in October. But once again, and be really cautious about that. If you see volume picking up at historical highs, that's not a good sign. That's even the worst sign ever. It means that we've got smart money activity into historical highs, and when they do that, generally means they're selling, and that's not a good sign. So this is what I'll be closely watching for in the next following days, but I pretty much expect the Dow Jones to reach out to those levels thanks to Apple, Boeing, and things like that that could make some short-term gains in order to reach out to that historical high. Stock Wall Street right now is not trading anything too rational. It's just we need to get to the historical highs because we flushed the risk, everything is blue sky, glitters all along the way, lots of dollars in the eyes, lots of greed, lots of stupidity, lots of risk taking. You know how this will end, but you don't want to be missing the timing out there. So that being said, I'm going to take the questions if you do put some out there, and then we're going to stop there. You're seeing headlines related to BTC that the price will pump to 100k soon. That's a classic time to sell. I totally agree. I have watched this cycle of market manipulation long enough to see right through the game. Going on with those who make the crypto news, the fake pumps are getting weaker and weaker. It has the feeling that the 6k level will get smashed, and watch the panic setting there. I damn agree, but we've got a difference out there. It's the thing that we haven't made a new low, and that's a game changer. And to me, that's what makes the entire difference in here. Is the fact that previously we always made lower lows. We didn't right here, but we made new candle closes at low. Means that if you're having a look at the line chart, we've been going lower in there, which we haven't in there. And that's what worries me right now. It's the thing that we have better odds to have a deeper trap, which means we could go breaking that high, but not breaking this one and remain bearish. That will be a trap. Just to be really straightforward in here, it will be just because of a trap. Because if we go there, sine wave is going to trigger the bullish breakout. So a bullish breakout is either going to trigger a trend or extend the range to probably this area, bottom, resistance. We might be staying here for a little while, but we might have to get there, which means we're just going to take the breakout target, which is probably going to be there, and that will be the target we'll seek for the range. Okay, and we'll probably get there, make a deep pullback, but we'll have a buying opportunity right to 11,000, for example. It's probably going to be the target out there. You just take sine wave, it's going to put the breakout level in here, back to the previous market top, market bottom of the previous cycle, at the closes, which is there. You're just going to pull this upward, and this is giving us a target right in here. So just as I said, this will be the target for me if for some reason the breakout is followed through. Option number 2, it's just a fucking fake breakout. We go there, we trigger the stop entries, and we reverse. This is the reason why I think the market could just go there, breaking that resistance just to trigger some bearish activity afterwards. So lots of possible traps in the near prices. We could just be a fake pump in here and breaking all the way through down. Through new lows, or we could just try to fake a bullish breakout first. Too many options to fake those prices. I don't see enough volume on this bottom for now to consider this a viable buying opportunity. All I can tell is that I would have been ready to do it if we had the desert crossing phase. For now, too much uncertainty. Too much uncertainty leads me to believe that it's too early to get into considering a buying opportunity secured. So you don't want to be into leverage. You can be a buy and holder. Once again, I am, but on Ethereum, because I think prices are better out there in terms of risk-reward ratio. Doesn't mean the Bitcoin will not terminate its crashing pattern out there. It's very well probable. But if that's the case, then I would like to have additional signals, either that V-bottom structure signaling we chase down all the speculators, or the desert crossing phase. Anything in between is nothing I want, nothing I care about. So to me, all I have in front of me is just noise. I don't want to trade. That might be looking like trend to other traders, and I agree with them. We might have signs of trends, but I see lots of probabilities to be fake triggering trends, and in that perspective I don't want to be trading. I don't want to be trading because I've already put some money in the game. If I was out, I think being a buyer right now is what should be at play. But being an aggressive buyer with leverage or anything like that is nothing like I care, nothing like I feel. So I do trade accordingly to what I feel. And I feel right now being bullish is normal, but being aggressively bullish and too confident bullish would be the biggest mistake to make. On the IOTAUSD chart, how do you determine the range of price for buy and hold? I think prices are very interesting at that moment, but I want to be FOMO. Thank you in advance. So we're just going to cover up IOTA. We're going to take IOTA's index. Just give me a couple seconds to go find that one. I didn't, but no problem. We just took the IOTA USD out of Bitfinex. Right in here as well, I've been triggering a taking profit pattern, triggering the blue triangle, confirming the taking profit activity has been detected by sine wave. So we confirmed some bullish activity out there, but it's a taking profit pattern. To me, the exit pattern we have on Ethereum is a lot stronger than what we have in Ethereum, in IOTAs. So to me, IOTA, even though it has a strong bullish action, is overbought right now. So all you can expect right at that point is a bullish breakout trade, which means you're nothing close to a price that is a bullish breakout. So you got nothing to trade. So you've got to wait for the price to reach out to that resistance, build a resistance, and breaking it up is the only solution you have. So it's basically a breakout trade, just the one I've been saying regarding Ethereum, regarding Bitcoins. That breakout trade could very well work out, or absolutely not, and just be a fucking trap. So it's pretty damn hard to do, but I wouldn't suggest you to buy IOTA right now. More likely just doing nothing. The only thing you could just have bought was Ethereum's, and they're not performing that well. Bitcoin isn't either. IOTA is doing something great, and you have some decent pullbacks out there, but I don't know if I absolutely want to have those in my wallets. I've been getting rid of my IOTAs, and I'm not yet ready to get them back in. Even though, just as Ethereum's, we've been triggering the potential end of the pattern. We've had the flushing down, getting in there, taking profits, signaling the bears are getting out, and as bears are getting out, we might have the bulls at play in the long run. But the problem is, this is just a taking profit pattern. That's not enough to me. So in terms of confidence, really lots of confidence to me in Ethereum's, because the patterns that have been triggering out there are a lot stronger than what we have in IOTA, even though IOTA is showing some better early signs of strength at the current stage, as we do have a better recover on that market. It's already overbought when we are clearly far from being in Ethereum's. As you can see, Ethereum's were pretty damn far from overbought. Anyway, buying overbought is not a good sign, but being overbought in a bearish trend is either a sign of pre-selling signal, which means IOTA could eventually dump again if we're still in a bearish trend. But if we make prices going higher than the overbought, means that obviously the trend might be over. But it's too soon to tell, so you better want to wait. First, to have the overbought pattern confirmed by a candle close, and secondly, you might want the market to go higher than that with candle closes to make sure you're reducing the risks enough on those trades. Remember that taking gains is not the hardest into trading. It's most likely not taking losses that is the risk. That is the hardest thing to do, and this is what makes you a good trader. Avoiding getting into stupid trades that will make you lose money, as getting into making money into trading is not that complicated. So that's it. I wish you guys a pleasant week, and I'll see you later next week. This time I'm not cutting off the subscription plans, as I'll have a little bit more time to handle them. But if you do subscribe in between, be aware that there might be extended time to wait. I remind you that giving you access to indicators is something that is a manual process that only I can do, and I will do it twice a day. I mean, on the morning and probably on the evening. So if you have to wait for 12 hours to get activated, don't drive yourself crazy. It's going to be normal. Just be aware of that. Probably extended time to get you activated. That would be just normal. But obviously, if you're not activated in more than 48 hours, you have to reach out to me. That will be abnormal and probably may have missed you or something like that. But normally, you should be activated within 12 hours. So, goodbye guys, and see you later. Wish you great vacations if you do take some as well. Otherwise, I wish you good trade. Trade safe, and see you later.